Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market update for Monday, May 20th, 2019. Pretty nice day to the downside today, especially on QQQ, the tech-heavy index. That's the story. Markets going up. It's the same handful of FANG stocks that are doing most of the heavy lifting, and then when that trade is reversed, it simply goes the other way. So you'd expect QQQ to outperform to the downside, which certainly it's done recently, including today. So starting out, one of probably the most significant development today is we had a nice gap down. I talked about that scenario on Friday. Be just a nice thing to see for the shorts. It denies, it traps long. So if you remember last week, we had here. Let me flip to another board here and look at something. Okay, here's the levels we're focused on. To keep this simple, we're still between the what I think to be a pretty important level, about 186 on QQQ and about 178 on the downside. 186 to the upside, 178 on the downside. And again, that's the recent lows there. So we had the gap down scenario today, and what that does is it's pretty bearish, because you had, remember last week we had a 2-day rally, pretty impressive rally, but again, nothing more than just an oversold snapback rally at this point. And you had a big green candle there and a big green candle on Thursday. And of course on Friday we wiped out all the buyers. That entire green candle was wiped out by the close, which again means anybody that thought the worst was over, stepped in to buy, they were wiped out. And of course today we wiped out not all but a good part of what is that, Wednesday's candle there, and that's pretty bearish. And of course by doing so with a gap, as I mentioned, it kind of traps in those longs that maybe bought along this rally and put an objective stop somewhere right below Thursday's lows. Because when you are stopped, remember, gaps will bypass a stop. There's only two types of stop. Well, there's many types of orders. It get complicated, but for most people use either stop loss or a stop limit. Stop loss orders are probably the more common of the two. It's a trigger on a gap. What'll happen is you are then filled a stop loss order. Once the stop price is hit or exceeded, it triggers that and converts it to a market order. So you have a tight stop loss order up here, let's say, but you went home on Friday, and then what happens is when the market opens, all those stop loss orders at the open are converted to market orders and executed and filled there. So stop limit orders, well, you won't get filled anywhere but the limit price, but the problem is they get bypassed and not filled. So if you had a stop limit order in place, you gap down and your losses are accumulating. You're not protected at all. If it never trades back up to that price, you're never going to get filled. So keep going down. So yeah, of the two, I like the stop loss orders, but again, it depends on each position. Anyway, that's what happened, and again, that is what it is. But bigger picture, let's just try to keep this into perspective here. The bigger picture, we are smack between support and resistance, and as I said, it'll be a battleground, I believe, between the bulls and the bears, between these two levels here. Here, let me box that in for you. So nothing major today. There's your levels, and unless 178 goes with conviction, and the level I'll get to here on SPY as well, or we break to the upside, we could chop around in this range. So the bears, if you want to play the short-term game, sure, the bears won today, but this is still anybody's game as far as which way this breaks to the upside or downside. The only other couple of things that stand out when I look down at the indicators below, you have the PPO signal line, which is does a pretty good job as a trend indicator on various time frames. That's the white line there, the 9 EMA, and when it crosses above the 0 line and trades above it, the trend is bullish. So you had a bullish trend all along from here to here. Let's box it in with a box tool. So there was your bullish trend, and said stay long, or at least that trend indicator is telling you the trend was bullish. Crossed below bearish right there, and it said that trend was bearish, and crossed above bullish, and has been since then. So we're still there, and very often that signal line there, the 0 line, the dotted line in between, will act as support or resistance when tested from above or below. So as of now, you have it coming and testing the 0 line from above. So there's certainly the potential. You can see there was a test right there. We had a bullish trend back in QQQ at the time, and came back in. Looked like things were getting ugly, but we had a successful test in the trend. We had another rally up from there. It was only to this point here where it crossed down below and had a little period where it traded. But so there's one thing to note as of now. The other is the 50 level on the RSI was hit. We were oversold or very close to it, bounced back to the 50 level, and that often, not always, but quite often, that 50 level will act as support or resistance. See on the RSI as well, defining the trend. Obviously bearish when below, so we hit it, fell back. So what the bulls want to see, a couple things here. They want to see, as far as these indicators go, that RSI get clearly back above the 50 level, that midpoint line there, the white dotted line. You can see bullish trend when it's above, bearish trend when it's below. And of course, they, as I said, they want to see this PPO turn up here with that white line coming back up again, and that would entail, of course, then price wise you want to see the break above 186. Otherwise, you know, if we break 178 to the downside, which is still what I'm leaning towards ultimately, whether it happens tomorrow or whether it happens 2 weeks from now, that'll happen. Then you bears want to see a cross down below, a solid cross on that, and of course keep this RSI down below that that 50 level. All just various things you take into consideration. Not any one of them is going to, you know, automatically flip the trend to bullish, from bearish to bullish, or vice versa. Just things that I'm watching here. And here's SPY on the daily chart. You have the levels that I'm watching, 289.21 above and 279.93. We'll call it 280-ish down below. SPY is still, you know, walking above this downtrend line, you know, coming in almost back tested a little bit above it today. Not down, only down about half or whatever or so of what QQQ was down today. And of course, you SPY, you have your steady Eddie dividend stocks, utilities, REITs, defensive issues, so to be expected as well. 60-minute charts, not a whole lot new to report on SPY. You know, we were down, as I said, gap down today, failed at my max bounce target right here last week and have been moving lower since. So we still, like I said, it's still a matter of the recent lows being taken out or those highs from last week. And we look at QQQ. Similar story. We have the you know, failure at my max bounce target last week. Very objective shorting op, time to, you know, layer in the last of the short exposure, and then a gap down today, which, as I said, and you note as well, and I covered this in the video for members earlier today, the midday update. You can see how well the, you know, the technicals are working here. Each of those lines, you know, they were resistance levels on the way up, but resistance once broken comes support. So then you can see on Friday we parked right above, right on top of support there, that 182.76, and we gapped down today. And then I had mentioned earlier today in the trading room for a you know, a day trading op or managing any trades, we opened down, got pretty low, and started to rally back up. And I said, watch this 181.13 level again. That was my lowermost bounce target last week, and that was resistance, and said that you know, could come in and cap today's rally. And you can see perfectly, not one but 1, 2, 3 consecutive candles kiss the top of that level almost to the button. And again, that hasn't been modified, and then we rolled back down. Where we go from now, like I said, it's hard to say. Today, like I said, you want to play the short-term game, give it to the bears, undoubtedly. How can you not? We went up, gap down, and ended up closing down, never even went green throughout the day. But again, bigger picture, I showed you we're still within those trading ranges. And there's some developments I see on the short-term charts and things like this. You know, I don't cover active trades on the site, but this one we closed out today, so I'll cover it. Our short trade on SOX, we shorted it less than 2 weeks ago right here. Breaking this trend line, we're using the 120-minute chart right there, and shorted there, and we already hit our max target today. Now again, keep in mind, and I said this on the side, I think there's a lot more downside in the semis to come in the coming weeks to months. However, we may bounce first. I mentioned some bearish developments. I'm sorry, potential bullish developments on Intel, one of the largest semis coming up. And maybe even a trading op there, a short-term trading op. But usually when my trades hit their final targets, and again, I refer to this as my final near-term target. Going out weeks or months, I see more downside in the semis, but nothing goes straight down forever. 60-minute chart, you can see down below, we're very oversold. And usually when you get quite oversold on the 60-minute chart, you're going to get a bounce. Not always. You can certainly become more oversold, and just want to point that out. This is a, what was a drop off the high so far. In just a few weeks, we've fallen about 16%, so we're quite oversold, and we fall into support. So maybe a bounce, near-term bounce in the semis tomorrow. If so, that would also lift, most likely lift up QQQ and probably SPY as well. But we're in a very precarious technical posture. When I go back to the broad markets, by precarious, I mean we're just a bad day away. When I say a bad day away, I'm talking how much we can drop in one day. So that would only be from where we closed today on SPY, roughly, just ballpark in at about 1.5%. Markets can, go gap up or down, 1.5%. And on QQQ, we're talking about probably about the same, a little over 1%. So I just wanted to make mention. Sometimes you get close to levels like this, and I always say support is support until and less broken. So, if we were to gap below that level tomorrow and not regain it shortly thereafterwards, quite bearish, and we could enter a stage of, waterfall type selling. So far, it's been a relatively orderly correction. I mean, you might, to some, if you're not, haven't been trading a long time, you might think the volatility recently is insane. But again, this pales to what we saw back here in the fourth quarter, and this has been seen many times over the years. Price swings like this. So far, it's been a relatively orderly and somewhat predictable, at least in my opinion, correction. And now, the point I'm trying to make is we take out those lows, we may get that waterfall type selling. That would be a true WTF moment for the longs and the bulls if we take out last week's lows, and it would be pretty bearish technically as well, as for reasons I talked about before. So I just want to make mention. I'll talk about the potential we could bounce. We're still above that support, but things can go either way. So whether you're bullish, bearish, long or short, my advice, I can't give individual investment advice, just generally speaking, don't get married to your positions. Don't get married to the views that you think the market must do or might do. Stay flexible. And if the chart's all of a sudden to convince you, it's time to get out of your shorts or it's time to get out of your longs, then just don't underestimate how far the market can drop. Is an explosive rally to the upside possible? It is possible. I don't think it's very likely with what's going on in the technicals right now. But again, like I like to say, anything's possible in the market. So as of now, near term, tomorrow, coin toss. I'd probably expect maybe even a lift in the futures tonight. Maybe a pop up tomorrow. If you look, we have a big gap to backfill. If you're short-term trading, be a lot of eyes on that gap on QQQ. So there might be a gap fill trade overnight in the futures or maybe in the morning, and we'll see. We'll just have to go from there as far as the short-term charts go. And then just to wrap it up, so we don't lose sight of the bigger picture, these weekly charts, just, it's really, nothing has changed now for many, many months since going back here. It was indicative of a major top, and it still is. And then everything that we've seen over the last few weeks with that trend line off the lows on the 24th break and 1, 2, so far 3. But remember, this is a weekly chart. A lot can and will happen before the end of the week. So this candle right here is incomplete. This is just showing you a weekly candle, how it looks today. All that matters is how we close. If we close a week red, another red candle with a close below the previous week's candle, just all the more bearish. We'll probably get the bearish PPO cross here on the weekly, confirming this divergent high. Remember, we had a negative divergence right here, a divergent high, and that led to that Q4 drop. My expectation, I'm still leaning towards, the scenario that says this was just a shot across the bow, wave one down, little counter trend rally. Well, not little, but counter trend rally nonetheless, with a much more powerful leg down to come. And that's why you got to be careful. If we start to go down, that selling at some point will begin to is likely to begin to accelerate. And look, we're still comfortably above the 40-week moving average, which is a 200-day moving average. So bulls, there's still plenty of opportunities where we may come in. You might get even better prices if you're buying this dip or scaling in, or maybe holding off, waiting for some signs of a reversal or a little bit deeper correction. So I'll keep you updated as and if we get there. But as of now, like I said, I think it'll be we'll probably any reactions off those levels in anytime soon, unless the technicals change. I'd be very cautious of buying for anything other than just maybe a quick bounce trade, and even then, I'm not overly concerned or interested in doing that. And of course, long term, the SPY, here's a trend line, goes all the way back to the left of the chart. This trend line picks up off the March 2009 lows, comes in. It was broken last fall. Again, I know this is a recap, but sometimes there's new people coming into the site or the YouTube channel. Breakdown back test of a decade-long bull market uptrend line, and so far nothing but another back test at higher levels to simply extend the negative divergences that were in place right here at that high back in early October, followed by the first leg down. And again, much larger divergence tells me much larger drop coming down here to probably about that 214 or so level, which I think is about 25% off the highs. And we're not right now, we're not anywhere even close to any type of waterfall selling. If we hit that level, there will be waterfall selling along the way. This is waterfall selling, if you're not familiar with what that term is. Right now, we're just simply, this is a pullback to support. And I'm sure the majority of traders, investors out there are looking, where to buy and looking for higher highs as they have been for, I'm speaking majorities just from what I hear on TV, what I read in the papers, and what I hear, online everywhere else. So, and that may prove to be, we'll see. It's not my preferred scenario, but right now we're at support, and I've been saying this for a while. If you are bullish and of that mindset, if you were of that mindset a few weeks ago, I don't know what's changed. I know the headlines can make you second guess, but that's not being a disciplined trader. If you're trading to the technicals and you see pullbacks to support, you have the 200-day moving average, 40-week moving average right below. 281-ish is a key support level, as I've gone over many times. So that's where long should be stepping in and buying. If that goes, maybe we come down here to 262.23, and again, that would be my most bearish bullish scenario, if that makes sense. In other words, that would I can see the correction going about that deep without inflicting too much technical damage. But I can tell you this: if we get there, and we get there soon, you're going to have these divergences confirmed. Not that they're the be-all end-all and that they must play out. We had the divergent high there, and we extended the divergence. Maybe that continues. Maybe that keeps happening for a while we keep inching higher. That's always a possibility. But as I showed you, let me get back to my daily charts and we'll wrap it up. These are my color-coded levels. So this was, has been and still is my minimum target for this correction off the highs. But this is a key level here, 281, that we're flirting with. Again, it's those roughly three highs from back at last fall, and we danced around it earlier this year. You can see there's levels there. We come down here, and that's still, again, what I like to refer to as my most bearish bullish scenario. Bullish meaning the market's going to continue on to new highs. Anything below that, and we start to hit my caution levels, which are color coded. Yellow, orange is even worse if that level's broken, and red is get out of dodge time, because we'll probably slice right through the late 2018 lows. And then I have similar levels on QQQ. But again, we're not even close to those now. I'm going over those just, if and when we get there, because things can happen fast. That's one thing I've learned in the market. Don't fall asleep at the wheel. If you think we've seen volatility recently, again, all you have to do is go back for years or decades and look at other periods, and you can see where the market can fall several times what it has over the last couple weeks here. It can fall several times that in just even a few days if it wants to. So there's been, I think, a lot of extreme bullish sentiment, and more importantly, more dangerously, a overcrowded trade in both the FANG stocks and indexing. And when those start to reverse, the consequences can be pretty ugly. So just watch these levels. We're not going to waterfall sell off unless these levels start to go. So we'll take it one day at a time. But as of now, we're within those ranges. So we could chop around until then. Let's just wrap it up here and pick up tomorrow and see what happens. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.